Hi there, Serial Trader here. Let's check in with the major US indices heading into this coming trading week. And as usual, starting off with SPX. So I think I'll do something a little different today, as well as the regular routine. So we'll start off. So since the last video, we were looking to make a high above this previous high, which was at 29.1650. We've now gone above that. And actually, so far, we've gapped above it. And as of yet, we've failed to actually come down and close that gap, which is probably a pretty likely scenario at some point. Usually, gaps get tested. But not to say that there isn't some more short-term upside to go here, as we have just, it looks like I'll get to the candlestick chart in a moment, but I think we just, as a Friday's trading session, we just gapped up the new highs. So it wouldn't be surprising to see some short-term follow-through before any kind of significant pullback takes place. But putting all that aside, now at this point, zooming out, we can now count a completed from the triangle, intermediate wave 4 triangle. We have a 1 up, 2 down, and then we have a 1, 2, 3, 4, 5 of 3. Now we can count a 4. And now we're in the progress of counting a 5 within the 5th. So potentially a more significant top could be in the cards here soon. And I'm going to go to a weekly chart here and also a daily and make the case that we're possibly searching for an even more significant top, potentially a multi-month or multi-year top, depending on how things go. So let's just dig into that now for a second. Go to the weekly chart. And let's zoom out to, okay, this should be good. So since the bottom in 2009, that was right here, March of 2009, when the S&P bottomed at 666. Nice number of the beast there for any suspicious people out there, but really it's just a number. Since then, we've done a nice primary wave 1 up, primary wave 2 down, primary wave 3 up, primary wave 4 down, and that was that nice bottom in February of 2016. And now we've done a intermediate wave. So I haven't shown the subdivisions of these primary waves 1, 2, and 3, or 4. But since we're in this primary wave 5 now, I want to dig into the subdivisions. So we have intermediate wave 1, intermediate wave 2, intermediate wave 3, and then we had our intermediate triangle wave 4, and now we're working our intermediate wave 5 to the upside. Okay, and a few things I'll point out here. So what made me suspicious, so a lot of people were considering that this intermediate wave 3, as I have it labeled here, a lot of people were thinking that might have been the top, a significant top in the stock market, and that we were going to enter a large bear market. Now, what had a lot of technical analysts suspicious of that, including myself, is typically in the final 5th wave of a very large sequence in the stock market, you typically see bearish divergences. That is, typically you see price make a new extreme, but RSI doesn't, and MACD moving averages don't, and there's various other technical studies that you could use to show divergences or non-divergences. In this case, we'll stick with what I've typically been using in these videos. So when I saw the RSI was extremely overbought when we made this big price extreme, that kind of made the case to me that, well, no, it's not a divergence, because we've made a new high in price, and we also, if you look back here, we made a new extreme in RSI that we hadn't seen in well, not since 2009, or probably, a long time ago. Maybe back in the 90s or something, if I go back. But, so the point was there was no divergence. You were making new extremes in RSI and the MACD moving averages, and various other studies, if you want to use them. At the same time, you're making new highs in price. So that made it more likely that we had a wave 3, because wave 3s typically are the strongest and have the most momentum behind them, okay? And then we had our requisite, what ended up being an ABCDE triangle wave 4. So the bull market was not over yet, But now we're making new highs. Okay, we're making new highs in intermediate wave 5 of primary wave 5, as I have it labeled. And within intermediate wave 5, we're also looking quite mature, as I was showing on the hourly chart. And also, what do we have now? So I'm on the weekly chart, mind you. We'll go to the daily in a moment here, but what I want to show you is on the weekly chart, we are making now bearish divergences, which is something you'd want to see if you're searching for a major top in the market. So, making new highs in price, not making new highs on the MACD moving averages. Making new highs in price, and yet not making new highs in RSI. So bearish divergence on the weekly chart. Now, let's see if we also have that on the daily chart. And I'll dig into that. Okay, zoom out a bit here. Okay, looks like it's pretty clear to me also on the daily chart. So new highs in price over here, and yet not new highs on the MACD moving averages. So if I can hang on there, that should work better. Okay, so draw a little trend line here. So clearly showing not making new highs on the MACD moving averages despite price making new highs. Again on RSI, not making new highs in RSI despite prices making new highs. So bearish divergence. So now we have bearish divergence on the weekly, bearish divergence on the daily. A very mature looking Elliott wave count out of a triangle. And what do we know about triangles in the Elliott wave impulse sequence? They precede the final move in a sequence. In this case, the final move being a fifth wave. So a lot of technical evidence starting to pile up that things are looking toppy. Now, I haven't even looked at this yet, but let's look at the monthly chart, see if that's the same story. And okay, looking here, okay, yeah, we even have bearish divergence. It's not even it's not really a divergence on the MACD moving averages. It's fairly similar, but on RSI, we have a bearish divergence on monthly RSI. So that's pretty powerful with three major time frames like that: daily, weekly, and monthly, making new highs in price, not making new highs, at least on the monthly, in RSI. So that's quite a powerful divergence, and that's something you definitely look at near tops. Just to show what I mean, if we go back, let's pick a significant market top. Let's go back to where did the market actually peak here? 2007, perfect. So look at this. So here's the market in 2007 on the weekly chart, and as you can see, the market actually had a high of RSI over here, right? So RSI actually made its high here and diverged. So even though prices made new high, it ended up being a terminal high, okay? And then, you had the RSI bearish divergence despite making that new extreme in price. Didn't make a new extreme in RSI. And then we had, S&P went from, 1,500 and change, almost 1,600 in 2007 at the peak to a low of 666. So that's quite the haircut. And let's do maybe a monthly. If I can go back to that. So look at the 2007 highs, and let's see here. Yes. So once again, you made a new actual high in price here on this monthly bar, and yet your RSI on the monthly peaked over here. So you had the RSI bearish divergence on the monthly before we formed that top in 2007. And I won't spend the time going back, but I believe it was the same. Well, I can just see visually here, especially on the monthly, very much the same idea on the 2000 S&P peak here. You made a RSI high way back and then diverged in this kind of euphoric top before we had this .com bust, as they like to call it. So we're now in those same technical conditions. We go to the We'll just rest on the daily chart here. Same technical conditions and very mature looking wave count coming out of the triangle. So I'm not saying, from a trading perspective, we should just be shorting the market here. That's not what I'm saying at all. And in fact, until something significantly changes, there's no reason to not keep looking higher here, especially, I trade futures intraday and maybe at times for a few days or a week. I mean, it's not going to matter until we actually change the trend, and we're just nowhere near doing that yet. But for like a macro investor, someone wants to hold and, just buy SPY as an ETF and hold it for years, it's really not a good look here for that type of individual. You should definitely be either running a reasonably tight stop or trimming your position, doing some sort of risk management, because from a macro structure level, it just looks like the party is in the very late stages. So hopefully that wasn't too long for you, but I think it's important where we are in the market, getting quite mature there. All right, so going to the candlestick chart, SPX daily. Yeah, we've gapped up, made new highs Thursday and Friday. We're above the T line, above the 3T line. A little bit of a pullback there on Friday, but really not even back to the 3T line. We are in the overbought condition now on the oscillator, so could form a top here at any point, essentially. And also we are heading into the October month. Not right away, but it's coming up, and that's seasonally not the best month for stocks, on average. So we'll see what happens. Could have some good volatility in October. And certainly with that wave count, we really could, at this point, form a significant top anytime. Doesn't mean we will, just means we're in the conditions where that's possible, or where you'd be looking for something like that. All right, so that's SPX. Go to the Dow Jones Industrial Average. And the Dow, finally, has broken out to new highs, and it really took its time. The NASDAQ and the S&P, especially the NASDAQ, did so much sooner since they formed their highs back in January there. But the Dow finally caught up, and now we're on a little bit of a breakout here. And yeah, new all-time high in the Dow, 26,769, well above the 3T line, the T line, everything's pointing up. We are in the overbought condition on the oscillator, but that doesn't mean sell. It just means wait for a top to present itself. And judging by the individual charts on some of the industrial names like Caterpillar and Boeing, this Dow rally might really have some legs to it before it runs out of steam. So we'll have to see. All right, we'll go to the NASDAQ composite chart. And NASDAQ not joining the Dow and the S&P in a breakout to new highs, at least not yet. So far, fairly choppy. Just looks like consolidation at this point. But if we were to lose, I would say at this point, if we lose that 50-day moving average and break below the most recent lows here, which on the composite was 78.73, if we do that, then I'm more open to the idea that maybe the NASDAQ has found its significant, multi-year top. I'd at least entertain the idea if we can start rolling over here. But again, we have a long ways down to go to really start changing the trend. But certainly we can see this channel that we've been holding for the longest time. We are now out of that, and now actually testing the lower boundary of this channel, and it's acting as resistance, whereas it was acting as support. So definitely a little bit of a change going on there. We'll see if the NASDAQ can recover and join the other two indices, or if tech has finally topped at this point. And it looks like we did have a bearish engulfing candlestick as well with the NASDAQ on Friday. Yeah, we did. So yeah, a little bit ominous on the NASDAQ, a little bit ominous for tech. We'll have to watch this one. At this point, too early to be an actionable bearish position, but certainly something worth watching. All right, with that being said, let's look at the VIX. And VIX, well, nothing going on here just yet. VIX is still showing no activity. It's quite low. Closed at 1168 on Friday, so near the lower end of its recent range. So yeah, VIX really has to start breaking out before we can entertain any kind of major bearish action on the market there. And the two will go hand in hand. But yeah, so far, nothing going on here at all. All right. Should be good for now. We'll check in on some things next week as things develop. All right. Serial Trader signing off.